bad. I'm recording. All right. How's it going? I'm gonna just call myself 27 Jordan guy because that's this fucking YouTube that I just made right here. Okay, cool. I've been wanting to get the fucking word out on this for a minute. I didn't know how to really tell my story on this conviction because I didn't want it to seem like I was fucking copying other people at all times. Um, I was more so assisting myself in my conviction with other people's theories. So I would just like to shout out four people. So I have that guy Astro, Jen Colado, David Marino Jr., and Lou on Money. Those are the main four inspirations for this whole take. Astro more in terms of the cycle theory. You got Jen Colado, who's the technical analysis person. David Marino, I credit a lot of the Wyckoff um, things, and then Lou on Money. It's more so like the back end of how most of these things work. Um, so as the title suggests, I feel like I have a confident ability to be able to predict the price of AMC for myself. I'm not saying anybody else hasn't helped out for this, but I think I have a confident ability to be able to predict the price action for AMC moving forward up until the squeeze. And I know it sounds unorthodox, but let me explain. So I'll start off with these two charts here. The top representing June to present day, and then the bottom representing January to May. Okay. So what do you obviously see about the two charts? They look pretty much like an exact print of each other, and that's not by coincidence. Credit to David Marino who introduced the idea of Wyckoff to me. Um, his Discord, I don't know if I'll be able to link it. I don't know how to use Discord that well. But basically, he talks about two different zones, accumulation and distribution, where certain institutions will be trading with each other within a price range that they deem suitable for them. And I believe he said something about like market makers that were able to, um, like deem when it is necessary to create a price move up depending on like the supply and demand zones in between a Wyckoff accumulation series before it goes into phase E, which is like a SOS phase, and you get all rippy. So what does that mean for us? Well, you can kind of see that sort of accumulation kind of going on right here. I'll just minimize this so you can, oh shit, you can kind of see. I even have it as my fucking wallpaper because this shit's been tearing me apart like nothing. So we'll go back to Chrome. So what does this suggest? Well, I'm not really here to kind of like go into the technicals of Wyckoff because, essentially I don't really care about that. I just want to know where this price is going so I can sell and get the fuck out of this stock because I'm tired of it. I would like to call myself like the range guy. I'm not too technical on like where price ends up by the minute. I more so care about like where price ends up like by like the end of the week or like at the most the end of the day. Well, how am I able to predict that for moving forward? Well, if you take a look at the two time frames and you line up Fibonacci retracement levels on certain swing lows and swing highs, you'll realize that they're forming macro fractals encapsulating each other. So you kind of have an example of that right here where this in itself will have its own Fibonacci retracement that would basically encapsulate this micro fractal. But that's why you kind of see a lot of break of supports right here because not only is it by its own Fibonacci retracement channel, but then you also have a retracement channel that you can form right here where it creates a lot of supports that get broken on the way down, which explains why right here we saw such an intense gap down because if you notice right here there's a lot of support that's holding this up, but right here it's not too much to where like it would be like an eye opener, you know what I mean? Like not until like you get down to these levels, because then you start noticing that okay, you have a retracement level that needs to be hit now. Usually once you cross over the 0.618, you usually have an intense gap down, and it's kind of been the talk of the town for this stock. You tend to see strong moves past the 0.618. So where do I think AMC is going? Based off of this, I could easily make a case that by November 3rd, we would be crossing over the 0.618 at around 40.45. I swear I had this at 40.8, but 40.45 is the overall conviction for me. By November 3rd, I'm pretty much sticking to my guns. Why is that? Well, okay. It's a couple of things. One, I noticed that with these fib levels, on both the January to May run up to the present day, you had a lot of basically retests being abided by, like to a T, and you can relate them on both charts. So when you start to notice that, then you start to look back and you're like, okay, well, what can we get out of this? You know what I'm saying? So taking myself back out of the Fibonacci, I just kind of wanted to start lining up different key points that I saw to kind of assist in whether or not this was a fair retracement to relate to this one. And, you know, judging by the looks of it, you can kind of get a clear indication that it's a pretty fair judgment to make that this is a good retracement level to make. And why is that? Well, you have this thing going on where when you retrace to certain levels, you're going to have some sort of consolidation before you start to see some sort of uptrend. That's just like the way of the fucking game. And because of that, you can start to see that on different price levels, it's abiding by the same retracement levels seen in May and seen in the present, with the same formation of patterns too. So what does that mean for me? Well, I called out about 2 days ago that, actually, I mean, I have it in the Discord right here, so you guys don't think I'm lying. I think I was in Jen Colados. I basically called out, let me see. I gotta find my fucking name. Whatever. I'll just basically say my conviction. Basically, I called out that according to this, we would be seeing May 6th play out for us on a larger scale. So what would that mean? Well, according to this, we would probably see at the lowest an average out of the 0 and the 0.236 fib retracement level, which is kind of what we saw right here. At the lowest, we saw a price of 890, and I think it was yesterday or 2 days ago, I said that the average will go to at least 35 if you were looking right here. And where did we bottom out at? 35. So I'm expecting some upside moving forward going into tomorrow and Friday. Friday more so being a day of, reckoning and pain, because you know how they like to force call options out of the money for some reason on Fridays. So what does that mean for us? Well, moving forward, I predict that, and I don't want to be too meticulous on this, is why I have ranges for this, but, hopefully by Thursday, we could see a retest of the 0.382, because down here, this is the same thing that played out. And then, hopefully Friday, we could get a secondary test of the 0.382 and consolidate a little bit below the peak that was seen. Now, the reason, see, this is why I don't like doing date by dates and I like doing ranges, because it's easier for me to say by November 3rd, we'll see 39.16, you know what I'm saying, or 40.45. Now, my theory on this is two things. One, when they wrote those call options in I believe it was June 3rd, so the day after the peak. Premiums of those were going for about 30 a pop for the contracts of the 145s expiring December 17th, 2021 and January 21st, 2022. Those premiums are now at $1. You know what I mean? And because of that, what I'm thinking is they wrote those knowing that the algorithm would play out up until this point. And if you check the volume of those options being bought, they're starting to go up right now. And the reason why I think it's a little shady that they're going up right now and not in October is because we bottomed out in October. So we easily could have seen, a lot of buying pressure come in right here, but they didn't. The buying more so came in. The beginning of October is when we bottomed at 33, and we could have saw a fuck ton of volume for these options getting bought up, which are far out the money. But this is where greed comes into play, because you have late October manifesting into this final low until we see this phase where we're supposed to retrace up. Retest up. Sometimes I get those fucking words wrong, my bad. And now the volume is starting to pick up. Well, why is that? Well, when you have call options that expire at a very close date, along with the fact that they're far out the money, there's a greater potential for better reward. And if I was a whale with $1 million, what was originally going to cost me, let's just say $1 million, will cost me now 200,000 on the same amount of contracts. Not the same amount, on more contracts, basically. Or however way you want to put that. I'm just saying it's fucking cheaper now because the expiry is closer. So that's why they fucking waited. Now, because of that, you see like all these call sweeps starting to happen, and you see people selling puts now, and mostly on the whale side, you see a lot of this stuff. The 13Fs have been fucking ridiculous. I've seen a company that closed out fucking like hundreds of their positions, and they only have 5 remaining open, all shares, and I think one of them was GME, and I seen another one where they purchased like fucking $1.1 million in calls expiring December 17th at the 60. Ridiculous. So my bullish thesis is basically that, the reason why the November strikes aren't so far out the money and are so low is because they know that majority of the uncontrollable run will be in November, and therefore it will make most of those strikes that are, I think the highest right now is like 80 or 90. They'll make them, it'll be very in the money by the time the run hits, which gives them a ridiculous chance to make some good dough on the algorithm coming before the December and January downtrend. Now you may be wondering, Makai, I just revealed my name. Why the fuck is there gonna be a downtrend in December and January? Okay, well, I'll tell you. Motherfuckers. Oh my god, this is just fucked. I can't look at that. Well, there's a little something called fib time zones, where if you take the swing low and the swing high, kind of the same concept of doing a retracement, you'll get time zones of fib, and historically speaking, the 13 to 21 brackets are the most bullish zones. Now, what does that mean for us? Well, every time we surpass the midpoint of 13 to 21, which is technically should be the most bullish zone, we tend to see a run up in the stock. If you were to do something over here, you would see it right here. But I kind of made a two-part example for this. Now, what does that mean? Well, judging off of this, if you were to make a case that you saw a run up and a distribution start to form, in our stock, and I have price levels I'm gonna get into right now for the highest. If you were to make a run up for this and you wanted to see how much time do you have to exit your position, Why is that? Well, because institutions have very large positions. They want to get out cleanly without tanking the fucking price of the stock and breaking the overall market as a whole. So when you have things like this, you have to take into consideration, um, who's on the opposite end of this, which is retail. I believe that if another distribution schematic were to play out, that we would be seeing this play out at around December 20th. The Friday, the Monday after December 17th. Ironically, that is the fucking day after, the trading day after those December 17th calls expire. You may be wondering, well, why the fuck do the January 145s exist? Well, I'll tell you. What's funny about writing these options is that the original writers of this, or whoever decides to write more, could still collect fucking premiums off of this shit if they decided to peak this at a certain Fibonacci level that I'll get into later. And what's funny is, like, they can easily just, like, reset this cycle for us to retrace back below like the 120, the 130, the 130 price. So because of that, you're gonna have a lot of people who are gonna be holding this option into expiry in January, thinking that they're gonna get another run up, who may not be informed about this cycle that's going on. Now you have this instance where you can make money on the other side just by writing and selling these calls. And not only that, but any new strikes generated the higher price prior to December 20th that I said is gonna fuck so many people. Like, it's ridiculous if the squeeze doesn't play out in the fucking 100 to 200 range. Which in an essence, if you were smart about this, you could do puts on the way down. For me, that's kind of like a gamble because it's like, this is a short squeeze play. And, you truly will never know when the fuck the stock is about to fucking rip. You know what I'm saying? Even though we've kind of predicted like 80% of what's happened so far. So I'll just get into the price levels. Actually, let me explain this. So if we were to perfectly replicate it, look, I did a lot of this shit in the background. I just tried to clean up the chart so that way it made sense. I did so many fucking time zones to get this like exact thing kind of set up. But if we were to see a test of this small degree fractal that was playing out, it will probably be by, my guess is November 8th. Why is that? Well, if you take a look back here, mind you, this was all timed meticulously. These are not bullshit drawings. Yes, I took the trend that happened from here, but I timed it to the T so that way it makes sense. All of this shit was done in the background. This is not just some random fucking drawing. I timed this shit. So don't fuck with me. No, I'm just kidding. I have a feeling that we might run up before earnings is projected to come. It doesn't make sense for earnings to be... Yeah, it does. I thought that shit was a Sunday for some reason. I'm so fucking stupid. But, okay, let me just get into the price action. So right here, you have a break at the 0.618 level at 10.73. Right here, you will have a break at the 0.618 level at 40.45. My projection is that we would at least see a break before November 3rd at the 40.45. Okay, in association with earnings pushing the price up. Then you would have a slight rejection off of the most formidable peak that we had formed prior to this downtrend, which would be 44, that we would need to break. What's crazy about this is I did not fucking draw any of these shits. I got it straight from here. And it's abiding by the fib retracement levels to a T by scale. Fucking ridiculous. Now, you may be wondering why the fuck there would be any sort of like ripples here. Well, 48.5 is actually a really crucial resistance that we would need to break, or around 47.75 to 48.5. So it gets a little noisy in here before you try to top out over at around the $51 area. I think the high is 52.75, so it makes sense. Now, if we were to go into phase D of Wyckoff accumulation, I wrote it in the notes right here. This is what we would be describing. The next what we can see after spring is the consistent dominance of demand over supply, the SOS. This is evidenced by a pattern of advances on widened price spreads and increasing volume. I'm circling it right now. Widened price spreads and increasing volume. I like my chances. This is back in May, by the way. This is what should play out. Not me. And reactions, LPSs, on smaller spreads and diminished volumes. The price moves at least to the top of the trading range. This is our trading range. This is the top of our trading range before we start testing all-time highs. LPSs in this phase are generally excellent places to initiate or add to profitable long positions. When you add, you average up, but you don't want to average up too high to be, average to the fucking tits, if you want to call it that. But let's say I were to add in this phase B, which is, I think, is what's happening right now. This is kind of like a fake out to kind of shake as many people as they can to be as profitable as they can be. In my opinion, this means fucking nothing. We'll be back at 37.88 by the end of the week. So because of this, you're gonna have a place and time where you're gonna be able to add, and only institutions are gonna be able to know this shit. Or you're gonna be able to add before the rip. Now, where will that rip take us? Well, you have a couple of options. Let me minimize this, and let me make this make sense for everybody. Okay. So historically speaking, the 1.618 and the 2.618 has been formidable resistances for AMC, according to the stock itself, because I think it has some sort of relation to do with 618. I'm just saying. So the resistances that we would be seeing on the way up would be a break of the 52.75 high. I know it says 51.33. It's ballpark. Let me zoom out here. Then from then on, we would see, I would like to call it FOMO. That would kind of carry us into a potential break of the all-time highs, kind of like what we saw going into May 26th. I personally went long on the 25th, I believe. Yeah, that was the second time I was holding AMC. The first time was right fucking here, so that was fun. Lost a lot of fucking money that day. Fuck those guys. So going into the week of the 8th, towards the end of the week, I would expect us by November 12th to be above 62.20. You heard it fucking here first. I know a lot of people on YouTube are calling for like fucking 67 by end of week, or maybe they're joking. I don't fucking know, but it doesn't make any fucking sense. It's not a sustainable move. You don't want price action to move that fucking fast. You want this to be slow, methodical. Get as many bull crawls as you fucking can, because you want the price to be sustainable on the way up. That's what makes the fucking most sense. So on the way up, we will see a fucking resistance of 62.20, which abides by two things. One, the Fibonacci levels, and two, all this fucking distribution that happened back here, which will make sense as to why there would be a slight dip down between the 1.618 and the 1 before we ripped into here, because then you would be attacking, I don't want to get this wrong, supply zone. There you go. So boom. Then, if you see right here when you're retracing, it's literally docking itself precisely amongst these fucking levels. It's ridiculous. So where does that take us? I'll tell you. So remember how I was talking about fractals encapsulating other fractals? With that, you can kind of predict the next leg up and where you would see your potential top. Just like how we predicted our top for this fractal, which would be a break of the 4.236 at around 79.8, only $2 above the all-time high seen in pre-market or after hours, whatever the fuck. Then you would start talking about the tops for this major fractal right here, coming from the 0.618 or the point. It's either the 0.618 or the fucker. It's interchangeable, but this if you were to run a retracement from the all-time high to the swing low down here, you would get a retrace of 28.4, which falls in between the golden pocket. So if you were to take a Fibonacci and why did I choose a Fibonacci extension from the golden pocket to the all-time high? Well, in respects to this, if you were to do the same thing here, actually, let me just demonstrate it. Fuck it. If I were to take a fib extension, just so you guys know where I'm getting my conviction from. Where's it at? Where the fuck are you at? Not trend-based fib extension. I think it is trend-based. I'm stupid. If I were to take a fib extension from the 0.618 look, okay. Here, this is the fuckery I'm talking about. Hopefully I can finish this soon. If I were to take a 0.618 extension from the bottom to the top right here and run it, I would see that my fucking pocket falls in between the 0.62618 and the 3.618 levels, depending on the swing low that I took it from. I feel like that's still inaccurate. Hold on. One sec. I think it's supposed to be right here, because that's like a true swing low. That makes a lot more sense. Okay. Well, you get this midpoint. So, using that same kind of tactic, and again, this is all ballpark. I can't predict the fucking future. You would see a potential top between 187 to 231, right? Now that last move from that bottom to that top right here was 874%. So if I were to take 874% from my macro fractal of 28 point, we'll just call it 28.4. That's in the golden pocket. Multiply it by 874%. That would be my price target ballpark. I know I have these fucking extensions wrong because I never had the extension like this. I will have to fix this in a later video. Actually, because I feel like I did it here right. Okay, here we go. Perfect. Where did I take this from? Yeah, it was from this bottom right here. Okay, I did that wrong. I'm sorry. So taking it from the bottom, you will see you fall in between your 2.618 and your 3.618 in terms of a potential next peak. If you do the same thing here, and I'm sorry, yeah, it wasn't this. It was the swing low to the swing high. I'm so stupid. I'm sorry. Then okay, this makes much more sense. Then you would get the brackets in between the 2.618 at $233 to the 3.618 at $294, which I predict this will top out at either before we go into another distribution phase or we start to see some cover. Now the 874% move will put us at $248.21, which is where my price target is. That's my top. and that's where I'm sticking to. And to finalize the video, I feel like we will see that 248 price target hit by, let me get it over here. Oy. The week of the 22nd. And I know that's like ballpark, but I just remember doing the fucking calculations in here somewhere. If you take my word on it, that's fine. I don't give a fuck. The week of the 22nd is where I feel like we'll see our peak. And it makes sense because it plays into options expiry before theta starts to kick in hard as fuck, 30 days out. And on top of that, you have time where institutions can be able to liquidate their positions before we see a distribution schematic play out on the 23rd if they were to continue this algo. That's my take on it. Appreciate you guys.